Hi, this is PR Sundar. Welcome to Post Market Report sponsored by Delta.exchange. And today the morning the global cues were very bad and the SGX Nifty was indicating about 150 point down, but we fell even more. At some point of time Nifty fell nearly 250 point from yesterday's closing. And today what was more evident, for the last few days it was only the large caps that were falling, but mid caps and small caps were doing very well. But today the mid caps and small caps were hammered, and throughout the day they were down more than 2%. In the last 1.5 hour rally only it has recovered a bit, but still both the indices are about 2% lower. And come to sectoral indices, and I think all the sectoral indices are down, but some banks, particularly ICICI Bank and Kotak Bank, helped the market to stay afloat. And in fact, today the Bank Nifty closed in green, while the Nifty fell nearly about 150 points. And throughout the day, the markets were really falling, and even after 1:30, around 1:45, the Nifty broke the day's low, and the moment it broke day's low, it fell about 20 points from day's low. Then probably domestic institution would have stepped in to buy, and there was a huge short covering. And Nifty shot up nearly 140-150 points from intraday low, and the Bank Nifty shot up nearly 600 points. Then, as usual, at the peak there is some further selling, and the Bank Nifty has fallen about 200 to 250 points, and Nifty fell about 60-70 points. So the things were really looking very bad. The stocks like HDFC and HDFC Bank, no matter what happens, and every day they keep falling. And at the end of the day, FIIs have also sold. I think today they've sold quite a bit, and today they've sold for 3,128 crores. I think now FIIs have started again, and every day they keep selling. And the domestic institutions have bought for 870 crore, and the markets were hugely volatile. And like trading in this market is going to be very difficult. What happened after our market close? The consumer price inflation data came, which was at 6.95, which is close to 7%. But remember, RBI comfortable range is 2 to 6%. But this is much more than the range. But anyway, in US markets, they are going to keep on increasing the rates. So definitely in India also they will raise the rate sooner or later. So in the last RBI meeting, there was no increase. Probably the next RBI meeting we can expect some kind of increase in the interest rate. But this inflation, interest rates, they are blown out of the proportion, I can tell you. And I tell you, between 2003 and 2007, during that 5 years, those days RBI used to meet only once in 6 months, I think. In every meeting they increased the interest rate, but still the markets shot up. In fact, the biggest bull run in India came in that period only. So for businesses to flourish, a little bit of higher interest, it doesn't matter as long as they can pass it on to the consumers. And when the inflation is high, which means that the consumers are ready to pay. And at 6 p.m. the US inflation data came, and people expected consumer price inflation at 8.4. It came at 8.5, and which is a nearly 40-year high. But however, and US futures are higher, SGX Nifty is higher by about 100 points, and everything is shooting up. And that's because though consumer price inflation data came higher than expected, the core CPI data came lower than the expected. So what is core CPI? Core CPI is the inflation data excluding food and energy. No matter what is the price, you still have to spend money for food, you still have to spend money for energy, petrol. right? So core CPI, in a way we can say there's a discretionary spending. So there the inflation has come down. So now the people say the peak is over already, and now the inflation data in the coming months will go down. So because of that, the bond yield has also come down, and right now I'm checking Dow Jones futures are up 233 points, and Nasdaq future is up nearly 2%. So go down also 2%, 3%, go up also 2%, 3%, gap up, gap down, you know, like the traders will be chopped off both the sides. SGX Nifty is also trading very well. So one good thing I can tell you in today's market, despite market was so bearish, everything was falling, the India VIX did not shoot up. So therefore, I think the downside from here is actually not much, it's limited. So that is one observation. The second one, the TCS, though it was moving higher after the results, but on a close to close basis, the TCS closed lower, but not a big, it's only 10 rupees fall. So the next trigger will come from Infosys results on Wednesday, that is tomorrow, and of course Thursday and Friday holiday, so we will react only on Monday. And then Saturday, very important result, HDFC Bank. And because HDFC Bank has been hammered like anything, and both HDFC and HDFC Bank both have fallen so much, if there is any good result from HDFC Bank, if there is any short covering in HDFC group, and then once again we will go back to 18,000. So this volatility is likely to continue, but one good thing is that today the event risk is over. So let us hope market stabilize, but from now onwards, both in US as well as in India, the corporate results will play important role in deciding the market direction. So that's it for now. Hope you enjoyed watching the video. Thank you for watching.